All right, today we're going to decode one of the most powerful tools in finance, the candlestick chart. My goal is simple. By the end of this, you'll be able to look at any chart and actually read the story it's telling you about the market.
Now, if you're new to this, a chart like this probably just looks like, well, a chaotic mess of red and green bars, right? But I promise you, hiding in plain sight is a crystal clear story. It's a story about the constant tug of war between buyers and sellers. And by the time we're done here, you're going to know exactly how to read it.
So here's our game plan. We're going to start small, breaking down the absolute smallest piece, a single candlestick. From there, we'll zoom out and see how they string together to form trends. And then, the really crucial part, how to spot the early warning signs that a trend might be running out of steam.
Let's kick things off with the absolute core idea. I want you to stop thinking of these as just price bars. Instead, think of every single candle as one round in an epic fight between the buyers and the sellers over a set period of time.
And that is precisely why they're so powerful. When you learn to read these candles, you're essentially learning to read market psychology in real time. You get to see who's winning the battle for control. Is it the bulls pushing prices up, or the bears dragging them down?
Okay, to understand the whole building, you've got to start with a single brick. So let's zoom all the way in on just one of these candles and see what story it has to tell.
So, every single candle, whether it represents a day, an hour, or even just 1 minute of trading, gives us 4 crucial pieces of data. Where did the price open? Where did it close? What was the absolute highest price it hit? And what was the lowest? These 4 points are what give the candle its unique shape.
The color tells you instantly who won that round of the fight. The thick, solid part of the candle is called the body. If that body is green, it simply means the price closed higher than it opened, the buyers are in control. If it's red, well, the price closed lower. The sellers won that particular battle.
Now, the size of that body tells you everything you need to know about momentum. A big, long body shows powerful conviction. One side is winning and they're winning big. But a tiny little body? That signals indecision. It tells you the market is in a stalemate, with buyers and sellers locked in a tight struggle and neither one can really take control.
Okay, so now that we can read an individual candle, it's time to zoom back out. Because when you start stringing these individual stories together, they reveal the bigger picture, what we call market trends.
An uptrend is that classic picture of a market on the rise. But here's the key. It's not a straight line up. The structure you're looking for is a series of higher highs and higher lows. See, every time the price dips, it finds buyers at a higher level than the last time. That's the textbook sign that buyers are firmly in the driver's seat.
And a downtrend? Well, it's pretty much the exact mirror image. Here, the price is making a series of lower highs and lower lows. Every attempt the buyers make to rally gets shut down at a lower price than the previous attempt. This structure is telling you, loud and clear, that sellers have the upper hand and are pushing things down.
But what happens when neither side is really in control? Well, then you get a sideways market. The price is basically trapped in a box, bouncing back and forth between a ceiling, which we call resistance, and a floor, which we call support. This is a period of pure indecision, where the market is just waiting for a clear winner to finally emerge.
Okay, this is where things get really interesting. Because let's face it, trends don't last forever, and being able to spot the early warning signs, the little cracks in the foundation that tell you a trend is losing steam and might be about to reverse, that is an absolutely critical skill.
You want to start looking for a change in the market's personality. Are those big, powerful green candles starting to get smaller and smaller? That's a sign of fading momentum. What about a single unexpected red candle after a long run of green ones? That's your first clue that sellers are starting to show up to the party. These subtle shifts are often your earliest heads up.
Think about it. An uptrend is healthy as long as it keeps making those higher lows. But the second, the very moment that price fails to hold support and creates a lower low, meaning it breaks below the previous swing low, the entire structure of that uptrend has been broken. That is a massive red flag that sellers are now strong enough to start taking back control.
And, of course, the exact opposite is true for a downtrend. A downtrend is defined by that series of lower highs. The very first time the buyers can muster enough strength to push the price above the previous high, creating that first higher high, the downtrend structure is officially broken. That's a powerful signal that momentum is shifting back into the hands of the buyers.
All right, let's bring it all home. We've covered a lot of ground. We started with the DNA of the chart, a single candlestick. Then we saw how they group together to build trends, and finally, how to spot the clues that those trends might be coming to an end.
Think of this table as your cheat sheet. Your number one job, before you do anything else, is to simply identify the current market condition. Are we in an uptrend, a downtrend, or just chopping sideways? Because once you understand the structure and you know who's in control, you'll have a much clearer idea of what to do next.
So, I'll leave you with this question. The next time you pull up a chart, don't just see the chaos. Look for the individual candles. Piece them together to find the trend. And then, hunt for those subtle clues that hint at what might be coming next. Every chart is telling a story, and now, you have the tools to finally start reading it.